Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the weekly review for the week of October 25th, 2013. From a grain perspective, a very quiet week. In fact, today here on Friday we had a 2.5-cent trading range on corn. I can't remember in recent history where we've seen trading ranges that small, especially right here in the middle of harvest. To tie that in, for the month of October thus far, with 4 trading days to go, the trading range for this month is 18 cents on December corn. The last time the trading range was less than 18 cents was in February of 2006. Now, keep in mind at that time corn was well down in the mid 250 area, so obviously a lot cheaper commodity, so trading ranges even at that point at 15 to 16 cents was small. So 18 cents was something in the 450 range, kind of interesting. In comparison on beans, 55-cent trading range thus far this month. You got to go back to June of 2010 at that point to see a trading range of that smaller magnitude. In fact, before this week the trading range was only 40 cents. For the soybeans so far this month. We took a nice little pop above $13 on November beans this week, technically taking out recent resistance here in the last 30 days or so. The last time beans in June of 2010, we were also under $10 of beans, so obviously a cheaper commodity back when we had those trading ranges in that of that small magnitude, and it's been highly reflective not only in the volatility of the market, but in options. Option premium right now is as cheap as we've seen in quite some time. In fact, one of the floor brokers was mentioning to us that he feels some of the volume on the floor may be as slow as we've seen since 2006, before the whole rally started. And in his eyes, fund activity or margin money activity is the lightest we've seen in quite some time, again based on this lack of volatility. This coming week, the 31st, we will get an export sales recap. Now this is to clarify or correct some of the weeks that were missing due to the government shutdown. So we're basically going to get 3 weeks of export sales on Thursday on Halloween. We'll see if it's a trick or treat. Many of the demand bulls are trying to use that as a little leverage because we have seen some decent business here lately, both in corn and soybeans. That number may have some positive impact. We will see. That will shortly be followed a week later, 2 weeks from today, November 8th. We finally get a supply and demand update and a production update. That's going to be closely monitored because of all the yield announcements out of the country and yield projections from some of the private firms, how big of a number the USDA may put out. We also may see some reflection on changes in acreage at that point, but I think at this point, many of the trade are looking for a yield in corn something above 160, and the soybeans nationwide something above 42. So we'll see how the attitude of the market is as we go into that. In our opinion, we probably haven't heard the last of the supply story, especially on this corn at this point. Speaking of corn, there's decent carry in the corn market right now. Spreads have been very quiet, similar to the board has been over the last several weeks. Movement is still fairly quiet. Harvest activity, we'll get an update Monday on harvest activity. Most of the trade are looking for corn harvest this coming Monday to be right around 50% complete. We are seeing some sectors of the Midwest with decent producer movement on corn. Other areas I don't think we're far enough along in harvest yet to get a good feel of what kind of producer movement we're going to see. Basis levels, especially in the western corn belt, will say otherwise, that movement has been very quiet up to this point. But as we get further along into harvest, look at logistics and that type of thing, potentially maybe there's some more movement at that time. Soybeans demand is building its case for in this bean complex. It's reflected in the spreads. The no March bean spread a couple weeks ago was down near 10 cents inversion. It's back out to pushing 30 cents here this afternoon. Meal demand has been very good. Soybean demand's been very good. Again, we'll see an update on what some of these sales numbers were next Thursday. But in a weekly sales report yesterday, it was a record 1 week export demand number for soybean meal, which is very interesting. We also had the monthly DDG exports come out yesterday for the month of August. That also showed a 1 week record for DDG exports. Most of that is going to China, about 60% of the DDG sales. So there seems to be some pretty good protein demand in the world right now when you look at meal and look at DDGs. So something to keep in mind. The other thing that will be reflected on soybeans, and we're in that transition time frame, and also some degree on the corn, will be South American weather. Right now, as we speak, that weather looks pretty good in the early part of the growing season, but obviously that could change. So that's, going to be a key factor as we go down the road. U.S. dollar continues to show some sluggishness. It's quiet. It's had a decent break here in the last 30 days, some due to the government shutdown and concerns in that regard. The dollar's back under 80 for the first time since February. That's a positive from an export point of view, potentially in all these commodities, and something to keep in mind there. Also, the stock market is at or near all-time highs, so investment money seems to be gravitating towards the equities versus the commodities at this point. As far as producer ideas, producer selling ideas, first on corn, know your local basis, check out these spot values. If there's a big premium to sell corn today versus tomorrow, obviously try to take advantage of that. The if part of that is, can you get transportation or trucking or whatever to take advantage of that opportunity? If not, there's pretty good carries in the corn market. Look for opportunities down the road. Soybeans, we see this almost every year this time of year. Beans, cash beans, need to be sold by the middle of December. Right now you have about a 25 to 40 cent premium between now and December versus after the first of the year. Market saying it needs beans today or here shortly, not tomorrow. So if you want to own soybeans as a producer, look at other alternatives with some options or something to retain ownership, because the cash market is telling you to sell beans over the next 60 days. Cattle markets at or near contract highs. Hogs reaching new contract highs this week. Cash cattle traded above $130 cash this week for the first time ever. There are good margins in the livestock industry. That's a positive for grain demand down the road, possibly, especially when the ratio with wheat and corn is at a fairly wide spread right now. Premium wheat, it takes wheat out of a lot of the rations that we've seen over the last 12 to 18 months. Thought of the week: the hard trade is often the right trade. If you have any questions, call us here at the office, 1-800-373-2525, website biscommodities.com, or you can catch us on Twitter, BIS_commodities. With that, this was Clark Neighbors, BIS Commodities, and have a great weekend.